Hello and welcome to Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 4th December. Coming up on the show, hopes for a rate cut from the Fed next week continue to grow. Nvidia's boss meets the president and other Republican leaders. I'll explain why. And why does Goldman Sachs believe copper's recent price surge may not last? So grab your coffee and let's own the morning. Well, let's kick off the things you need to know before the opening bell rings by taking a quick look at where US stock futures stand. Well, after yesterday's positive day with the Dow gaining over 400 points, it seems that US futures have hit pause just for now. Okay, the first thing you need to know is that rate cut hopes next week are on the up. A softer than expected ADP reading on private payrolls fueled hopes that the Fed may shift towards easing at its policy meeting next week. Traders are pricing in an 87% probability of a rate cut. That's according to the CME FedWatch tool. Further clues to the state of the labour market will come later today with updates on weekly initial jobless claims and challenger job cuts. The next thing you need to know is that Scott Bessent, as well as being Treasury Secretary, will become the White House's top economic advisor. That's according to Bloomberg. This is all dependent on if the president picks Kevin Hassett as the next Fed chair. And the last thing you need to know is that Jensen Huang, the boss of Nvidia, has met with the president and top Republicans. Why? Well, he's trying to secure favourable federal policies for Nvidia and the broader AI industry. Huang's meetings have come at a moment of intensifying lobbying, soaring investments, and audacious forecasts by major tech companies about AI's potential transformative effects. Of course, a key issue for Nvidia is the sale of advanced AI chips to China.
You've had conversations
with Jensen.
Right, so
Smart man.
in your conversations with him, have you kind of given a sense of where you are with export controls and the types of chips that Nvidia can give to China?
Sure, he knows very well. He's done an amazing job. Nvidia, very good.
President Trump's sticking his neck out and taking it on the chin and helping the country realize that energy is necessary for our growth is one of the greatest things he's done right off the bat. I committed to my customers, my partners, that we're going to build in this administration within President Trump's term $500 billion of AI supercomputers. And so that's the second part. As you know, at the moment, NVIDIA has been banned from going to China. Not to mention China has banned NVIDIA going to China. Yeah. And so I think we're the first company in history that has been banned on both sides. We have conceded essentially the second largest AI market, the second largest technology market in the world.
I know.
Now for a check on market movers. We're going to focus on retail. Dollar General has reported third quarter results just a moment ago. The company posted earnings of $1.28 per share on revenue of $10.6 billion. So earnings topped expectations while sales were in line with estimates. The company raised its full year estimates for earnings and same-store sales. The stock is rising on the news, as you can see, up over 3% in the pre-market. And it follows results from Dollar Tree earlier in the week, which highlighted the ongoing trend of wealthier customers trading down. Dollar Tree's CEO saying that more than half of the company's new customers in the third quarter had household incomes above $100,000. And the search for discounts lifting a broader group of retailers too. Just last night, Five Below reported same-store sales that smashed expectations, rising 14% as shoppers have looked for discounts. Five Below has raised its profit outlook 3 times this year. That stock also rising over 4% in the pre-market too. Meantime, wholesale giant Costco is also seeing sales rise, the company reporting its fiscal first quarter and November sales ahead of next week's full earnings report. Total same-store sales in November were up 6.9%, and for the quarter they were up 6.4%. But the results were shy of analyst expectations, and the stock is lower ahead of the opening bell, as you saw there on Wall Street. It's worth noting Costco's November results don't include Black Friday. Now, Costco will report its full fiscal first quarter results on December 11th. And even though results have mostly surprised higher in the third quarter, the outlook has turned more cautious. Macy's posted its strongest growth in 3 years, but the company's CEO warned that cost pressures and selective spending could weigh on holiday sales this year. Well as Dollar General's results, there are other big names to watch out for today. Here's Josh Lipton with what to watch.
Time now for what to watch Thursday, December 4th. Starting off on the earnings front, we're getting a big batch of reports on Thursday from the retail sector, including Kroger, Dollar General, and Ulta Beauty. Kroger announcing results for the third quarter in the morning. Analysts expecting Kroger to take a big accounting hit in Q3, about $2.6 billion, because it's shutting down 3 of its automated fulfillment centers. Moving over to the Federal Reserve, more commentary coming on Thursday from Fed Vice Chair for Supervision, Michelle Bowman. This is coming ahead of the Fed's preferred inflation gauge, PCE, coming out on Friday, and the December FOMC meeting coming out next week. Investors will listen closely for any clues in the new commentary for the Fed's path on monetary policy. And taking a look at the labor market, we'll be getting a weekly initial jobless claims data on Thursday. Economists forecasting that number to tick up to 220,000, signaling a small bump in claims, but still historically low.
Okay, we're heading for a short break now, but when we're back, our markets and data editor Jared Blickery takes a closer look at small cap shares. Welcome back to Market Sunrise. Well, let's take a moment now to hear from Jared Blickery. He's done an explainer on stocks in translation on small caps and how they tend to outperform their large cap cousins at this time of year.
Over the last 7 trading days, small caps have quietly run ahead of the pack, climbing above their much larger cousins in the S&P 500 and the Russell 1000 indexes. Even with mega cap tech and the chip trade coming back, small caps are starting to steal the spotlight. And this recent surge might not just be a one-off pop, as this tends to be what happens this time of year. Small caps are now positioned to ride out what historically tends to be their best 3 months of the year over large caps, and that's what we're breaking down on today's Stocks in Translation. Now, here's some basics you need to know. First, we're going to be talking about 2 different indexes, the Russell 2000 and the Russell 1000. The Russell 2000 contains about 2,000 stocks with a market capitalization or market cap of under about $4.5 billion. Those are the small caps. The Russell 1000 is like the S&P 500. It has the large and even the mega caps, only stocks over about $10 billion in market cap. And in a minute, we're going to take a look at the ratio of these two indexes, the Russell 2000 divided by the Russell 1000. But next, small caps often lag their larger cap cousins. But from about mid-December through early March, they've got a strong track record of doing even better. Now, this doesn't mean that history says they should be green this whole time. If they do go down, they just tend to go down less than large caps. Now, let's take a look at a chart of that ratio of the Russell 2000 divided by the 1000 over time. This is a work, by the way, of Jeff Hirsch over at the Stock Traders Almanac, and this chart starts in July and goes for 1 year. And there are two lines. The white line is the average of the ratio going back to 1979. That is our map. And the green line is what's happened so far since the start in July. When small caps are doing better than large, the line moves up. And when they do worse, the lines move down. Those numbers at the extreme left and right of the chart just refer to the ratio of the two indexes. They're really not that important. Now, notice how that green line is approaching the shaded area, which is the sweet spot for small caps. From mid-December through early March, it looks like the outperformance might have already gotten started this year, but we don't want to get too far ahead of ourselves. Now, let's call out the differences here because size matters. Small caps mostly tied to the U.S. economy, at least more so than large caps, and more sensitive to interest rates and credit conditions. And that's why they can swing harder in both directions. Large caps, on the other hand, tend to have a global revenue stream and stronger balance sheets, so they tend to hold up better during downturns and slowdowns. Small caps also tend to have less concentration risk. They're not dominated by 5 or 10 stocks the way the S&P 500 or the Russell 1000 are. But picking small cap stocks can be a tricky business, as analyst coverage tends to be lower. You really need to research what you're buying. So let's talk technicals now. In this 5-year chart of the iShares Russell 2000 ETF IWM, you can see that this is now the third time that price has traded above that key 240 level, which translates to the 2400 level on the Russell 2000 index. Each breakout attempt was quickly reversed after it failed, and when we hit it in October, there was a steep sell-off again. Small caps have truly frustrated investors over the last few years, so a big test is going to be if IWM can hold that 240 level. Maybe bullish seasonality means a difference this time, but that is an open question. So here's what to watch next. First, can the Russell 2000 finally hold that 2400 level and IWM its 240 level and stay above them? These are the lines in the sand. Next, do small caps continue to outperform even with normal pullbacks? Seasonality, it doesn't mean that every day needs to go up. It just means that the odds tilt in their favor. Then, are you trading broad exposure with an index ETF like IWM, or are you trading individual names? Remember that stock picking is even harder in the small cap space. So look for strong balance sheets, and yes, that means some fundamental analysis here. So as small caps try to break out of a multi-year ceiling, they've got the seasonal tailwinds and things are already swinging in their favor. A sustained rally from here would finally break the cycle that's frustrated the bulls for years, but more frustration wouldn't be too much of a surprise either. And tune into the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Okay, time now for another short break, but we'll be right back with trending stocks, including a closer look at one of America's most talked about companies, Palantir. It's time now for today's trending tickers. First up, we're watching Meta. The stock is actually rising slightly in the pre-market as the social media giant, though, faces a new antitrust probe in Europe. The new investigation is centered on WhatsApp and its AI policy. Earlier this year, Meta incorporated its AI system into the messaging app. Meta AI is essentially a chatbot and virtual assistant that is integrated into WhatsApp since March of this year. In a statement, Meta called the claims baseless. Okay, next up, we're watching Palantir. It's teaming up with Nvidia and US utility company CenterPoint Energy in an effort to fast-track development of AI data centers. The partnership will focus on creating new software to speed up construction, helping with permitting, supply chain and construction challenges. The new software will be called Chain Reactions. Now, shares of Nvidia and CenterPoint, well, they're barely moving in the pre-market, as you can see there. finally, take a look at shares of Salesforce. That stock is rising ahead of the opening bell after the company's third quarter earnings beat estimates and issued better than expected fourth quarter revenue guidance. Sales for the third quarter, however, did miss expectations. A bright spot, annual recurring revenue from agentic AI products climbed to $540 million, up from $100 million in the previous quarter. Now, Salesforce has missed the rally in big tech this year. The stock is down nearly 30%. Okay, we're taking a look at crypto prices this morning. It's been a bit of a roller coaster of a week for the world's largest cryptocurrency. Bitcoin is searching for direction this morning, hovering right around the $93,000 mark. Now, Josh Lipton sat down with Coinbase Chief Legal Officer Paul Graywall about the regulatory outlook and what to expect in 2026. Here's some of that conversation.
The Senate is considering their version of the Clarity Act. And what the Clarity Act, which passed the House early this year, would provide for the first time is a true market structure for crypto here in the United States. Now, earlier in the year, Congress passed and the president signed a bill regarding stablecoins, which is an important first step in providing clarity and certainty under the law for crypto and digital assets. But it's really time, it's essential that Congress finish the job. And that's what it will do when the Senate finally passes market structure legislation in short order and the president signs it.
Paul, you mentioned stablecoins there. Now, Brian Armstrong also did talk about that. He said banks are exploring stablecoins after Congress passed the Genius Act. I'm curious, Paul, what does that mean, do you think, for the adoption curve?
Well, there's no question that traditional financial institutions, including banks, now understand very well the power and the potential of stablecoins to bring transformation to the financial services industry. And what it will mean, of course, is greater adoption, greater utilization, and improved efficiency throughout the financial system. We are pleased to see banks finally wake up to the realization that it's time for innovation in the way we move money around on the internet, and we're delighted to have them as partners in this space and look forward to their full participation.
Now, Paul, it wasn't just Brian Armstrong, your colleague at Deal, but we had Larry Fink there too. Here's another big name. He said Bitcoin, that was interesting, he said Bitcoin remains heavily influenced, Mr. Fink says, by leverage players. And I'm curious what you make of that, Paul. I mean, how much risk does leverage sort of still pose here? And how does Coinbase mitigate that?
Well, Coinbase has provided access to Bitcoin for millions of Americans, really going back to the earliest days of crypto. But it's a market like any other market that evolves with time, and it's natural to expect that individuals who may have been less familiar or even less comfortable custodying their own Bitcoin and holding it in their own wallets would want to rely upon intermediaries of all types in order to fully participate and finally participate in this market. We are seeing leverage and additional intermediaries relying upon leverage introduce new options for consumers to participate in the Bitcoin revolution. And that, of course, will require there to be new standards, new requirements, and new safeguards put in place. But we think that the market structure legislation is key to facilitating that. It will define for the first time which assets are subject to the securities laws of the U.S. and which assets fall outside of those laws. And we think that concerns regarding leverage and many others are best addressed by Congress and the agencies charged with writing rules once Congress acts.
We're going to focus on the price of copper now. Remember, it's a metal that is crucial to the AI sector. Now, Goldman Sachs has said that its recent price surge will be short-lived. The bank believes there's still more than enough of the metal to meet global demand. Since the end of July, the price of copper has risen over 20%. Demand for copper has been boosted by the construction of grid infrastructure for the green transition, but also by the need to power data centers for AI. These need over twice the amount of copper than a conventional data center. In fact, BHP, that's the world's largest listed miner, it estimated that at the start of the year, the amount of copper used in AI data centers would grow sixfold by 2050. Now, even though Goldman has raised its forecast for copper in the first half of next year, as it believes that tariffs will support prices, it doesn't believe there will be a copper shortage until 2029. In fact, it believes that demand will fall by 500,000 tons short of supply in 2026. And perhaps they might be right. Copper has long been the subject of bold forecasts that have fallen short of reality. And while a series of outages at major mines through 2026 has piled pressure on supply, the world's appetite for copper has also slowed more recently, despite obvious bright spots like green technologies. Activity in one key market, though, China, it has plunged recently, with consumption in the world's second largest economy expected to slow this quarter. However, India and other growing Asian economies are expected to boost demand in the coming years. Okay, we've now got some good news for American drivers, especially when compared to those here in the UK. The US national average for gasoline hitting a 4-year low below the $3 a gallon mark. And that's a bargain compared to here in the UK. We'd be paying the equivalent of, get this, $6.86 a gallon. That's why I drive an EV. Anyway, here's Ines Ferre. She's taken a closer look at what's driving the decline.
The national average for gasoline is sitting at that 4-year low. The price at the pump on Wednesday hovering just a hair below $3 at $2.999 per gallon. Meanwhile, roughly 30 states already seeing prices below that $3 threshold. You still have the western states that have higher taxes and fees on driving fuel. So the average, for example, in California is still at around $4.50 per gallon. But when you get into the Midwest, the Great Lakes area, down in the Gulf Coast, prices at the pump are well below the $3 threshold. Some stations are even seeing $1.99. That's something that the Trump administration has been touting in recent days as Trump ran his campaign with the promise of lower gasoline prices. The drop in prices has to do with refineries which have finished up their maintenance and the price of oil that has fallen this year as crude producers have been increasing output. Analysts say that barring some type of catalyst, you can expect prices to fall further going into the holiday season and into January.
Before we let you go, the outlook for gas prices next year, 2026, Inez, what are the pros saying?
So it's even lower. You've got the EIA that has the national average for 2026 at $3 per gallon. This year it was $3.10. Last year it was $3.15 or $3.30. So it's gotten lower and lower. Next year you are going to see prices going lower if oil production continues to be similar, or it has been rising. OPEC has been rising its oil production. They put a pause on it, but it's expected. I mean, you're looking at oil prices. The street is expecting Brent crude to go below $60 per barrel for oil for next year.
Okay, before we go, let's check in on the markets. Let's start in the world of crypto. Let's get a check in on Bitcoin. And the price there, not doing very much at the moment, just down 0.05%, as you can see. Still just slightly below the $93,000 mark. Okay, let's move on to gold prices now. And prices, well, they have slipped just very slightly as investors look to have booked profits and turned cautious ahead of next week's US Federal Reserve meeting, remember. However, the World Gold Council has stated that prices could rise between 15 and 30% in 2026. Now, that sounds great, but so far in 2025, gold prices have actually risen by over 60%. All right, let's move on to the Asian markets now. And in the main, markets were higher, apart from in South Korea, as you can see there. And that's basically on the back of hopes that the US will cut interest rates next week. Now, Japan's Nikkei was boosted by industrial and tech stocks as well there, over 2% rise in Japan. Okay, let's move on to Europe now. And stocks in the region were up in early trade. The Ukraine peace talks, though, remain the focus in the region. But again, those hopes for a Fed rate cut did help support the main indices in the region here. All right, and let's check where Wall Street might open later this morning. Now, US stock futures are in the green, but more like a holding pattern right now as Wall Street waits for data to test those pretty much baked-in expectations that the Federal Reserve will deliver a December rate cut. Remember, we've got more data out later today to keep an eye on as well, including those initial jobless claims numbers. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. I'm Ramzan Karmali. Go own the morning.